Suspense accounts. So the key points in this chapter are where there is an error that results in the trial balance no longer tallying. So the trial balance no longer tallying is that the debits are not equal to the credits. What we do in that situation is a suspense account. So we create an account called a suspense account, and we put in an amount that's the difference between the debits and the credits in the trial balance, and that is now the suspense account balance. We retotal it, and our trial balance now should balance there. Now, in terms of how AET calls that, they would call it a journal that's affected the trial balance, so our debits are no longer equal to our credits. This account, now we can't leave that suspense account as with a number in there because it doesn't mean anything really. So this account is then returned to zero, cleared, by reversing the journal or journals produced in error with the suspense account entry then making up the difference between the debits and credits in the incorrect journal. So we don't then post a journal again whose debits aren't equal to its credits. We reverse that journal, and we put for the difference in that journal we put a suspense account figure. We post that in, and that actually clears because it's the other side. That clears the suspense account. I'll take you through an example of that shortly. And then we put the correct journal in. So in the exam, you're typically going to have what's the difference between the trial balance, which will create the suspense account balance in there. Reverse the incorrect journal that you'll be given, or typically given two journals. Reverse the incorrect journals, clear the suspense account in there, and then put the correct journal in. Or alternatively, to write out the suspense T account. Those correcting journals are posted through a daybook called the journal. This can be a bit confusing because all daybooks create journals. The journal is a daybook is basically a journal of special. It is a daybook for special journals, small one-off journals that are controlled by the financial controller or the finance director. It's called the journal because it has the ability to manipulate the accounts and create fraud, and as a consequence, it's controlled by the more senior accountants and is basically a special daybook. So it's a special daybook for special journals called the journal. Okay. Now the key to suspense account questions is really very good double entry bookkeeping. So in the introduction to the bookkeeping unit, I teach the positive money, negative money approach to creating journals, and I teach the accounting equation being assets equals liabilities plus credits. And the point of that is that it creates correct journals that you can then reverse and understand what a journal is and how you create the debits and credits, not just an expense is a debit because DebtClick says what it is. And then also with the assets equals liabilities plus capital puts the debits and credits on either sides of the T accounts and creates a much more better T account understanding. If you come into this question and you don't feel that you've got strong double entry bookkeeping, or alternatively you're failing on this question in your green light test from the exam itself, really you should go back and do chapters 1 to 6 of the introduction to bookkeeping book and the playlist and the paper and cups exercise method, and that will really sharpen up your double entry bookkeeping and allow you then to answer this question really quite easily. So that's what's required. So the steps to create and then clear a suspense account. So in this question in the exam, you're basically going to do the following steps really. So first of all, step 1, a suspense account is prepared with an entry that is the difference between the two sides of the trial balance. Typically, with a set of debits and a set of credits, and you'll create there'll be a difference between the two of them, and that is the balance that you put in for the suspense account to start with. The two sides of the trial balance are retotaled to check that they now equal one another. The original journal, or typically in the exam you're going to be two journals, is reversed. But because that contained an error, the two sides of the journals do not equal each other. But you're not going to post a journal whose two sides don't equal each other. The difference between the two sides is made up with an amount that we posted to the suspense account. So you post the difference to a suspense account, and you then post. So it's posted to the suspense account. Right. The new correct journal, then, now that we posted we reversed the original incorrect journal, is now posted, if required, for the actual transaction whose debits equals credits. Okay, so let's go through an example of this. So here we have a sales daybook, and it's been posted missing the amount they're posting to the trade receivables control account. So we just posted the sales and we just posted the VAT and we've missed off the debit in there. Trial balance is totaled in there, and here's our trial balance, and obviously we're missing the 120 debit on the debit side. So we create our suspense account for 120, retotal them, and now our totals are correct. Okay. So now we've got to reverse the original journal. So this was the original journal. We go back to here was this. So we're going to reverse that journal here, but you can see that it's a journal that doesn't balance. So to make up the difference, we put the suspense account figure in here and post that journal. So you post that in, clears the suspense account. Now that's back to 0, and then what we're going to see in the exam is you're going to typically have a couple of them. So there'll be typically a couple of these ones in there. So you're going to set up a T account in there. So there'll be like a couple of questions in there. See that you clear the T account and the suspense account, and then you post the correct journal. So here's the correct journal then being posted here. So in the exam, typically you're going to see two journals posted in error. So it's going to be really important to maintain the T account for the suspense account in your workings to see that the overall suspense account is cleared when you post both of the journals to reverse the error. You might sometimes see, well, just before we get into that, why not just reverse the original incorrect error? Well, you could do. If you found it before you produced the trial balance, then you would reverse the original incorrect error, and so you wouldn't be bothering with the suspense account if you'd found the error before you produced the trial balance. But if you produce the trial balance, then you don't know where the error is, and other people have got to get on and start to produce draft accounts and what have you, whilst you go and find the the error. So really, what happens is the suspense account gets created. The rest of the department gets on and produces its draft accounts for the period, for the month, whatever, whilst you go along and find the error, and then you reverse and clear out the suspense account. Really. So it could also be more than one error as well. So you need the suspense T account to control all the corrections. So that's why we run with this rather than just find the original error and then reverse it. Well, because actually that requires time, and we don't have that time. Now, there might be an attempt to shortcut this approach in the exam, because normally in the exam you're going to have spaces for two journals. Reverse the incorrect journal, put in the correct journal. That's what you're normally going to sort of see in the exam. Yeah. You might even see reverse the correct journal, what's the suspense account that would be in there, and put the correct journal in. So you might even have 3 spaces in there if that's happening. Alternatively though, the examiner might only give you 1 space. So there might only be 1 space for 1 journal. And if that happens, what you're doing then is you're going to get a net difference of the journal. So what we're going to do in that one here is, here we have the original incorrect journal reversed, and here we have the correct journal posted. Okay. There's 2 journals, but let's say we've just got space for 1 journal to put in there though. So instead, what we're going to have is that's just going to become debit the trade receivables control account and credit the suspense account. Really. So what we will see here is that we will put those 2 together, and then put these 2 together and clear them out, and you're just going to have that as the journal that you would post. You're just going to have to sort of what you do is you write out the two journals here. So you'd write out the 2 journals, and then you'd clear off the ones that actually copy each other. So if we go to here, let's go back to here. See, we're going debit sales, debit VAT, credit sales, credit VAT. So those ones cancel out from each other. Those would all cancel out, and all we're left with is debit trade receivables control account and credit the suspense account. So to do this in the exam, when you're just given space for 1 journal, write out the 2 journals in your notes, scrap out the ones that are duplicated, here in this case debit sales, debit VAT, credit sales, credit VAT, and then just post the numbers that are left over. Don't try and be too clever in it. Create the 2 journals in your notes, cross off the ones that are duplicated, and then post the remaining net difference journal. And the examiner can go in both directions, so you just have to go with it. The correct thing in real life actually is to reverse the incorrect journal and post the correct journal. That creates a good audit trail, but sometimes the examiner puts in this net difference journal. Okay, just in terms of the journal as a bit of a confusing name. In the introduction to bookkeeping unit, journals to the general ledger were posted using daybooks that have high volumes of transactions, so sales purchase daybooks, the sales returns daybooks, those kind of things really, and the cash book and the petty cash book. Those daybooks collect the volume of information on sales or purchases to post this volume as a single journal rather than lots of individual sales or purchases. For a manual system, that reduces the number of journals to be posted to the ledgers, reducing the risk of error. It also allows many finance staff to work on the accounting books and ledgers at the same time. In a digital system, don't really need it actually, because the entries are made individually to the ledgers anyway. But what about those financial transactions that only happen occasionally? Let's say an irrecoverable debt, these errors, accounting provision of doubtful debts. In level 3, you'll see accounting for stock and depreciation. Do we have to invent a daybook for each different type of transaction? Well, we don't. All the low volume transactions are posted in a book of prime entry called the journal. The title of that daybook often confuses students because as other books of prime entry, daybooks, are used to create journals. So the name really should be considered more as far as all books of prime entries create journals. But the journal is a book of prime entry to create and record special journals. This daybook must be carefully controlled due to the risk of error and potential for fraud. The journals that are included, because you might have a question in terms of name which ones are posted through the journal. Which ones of these journals are posted through the journal, really. So journals which are included as special, they're just in our general ledger without being in the normal course of business via making sales or purchase or receiving or making payments, etc. So instead they reflect items such as writing off irrecoverable debts, period-end journals, or correcting an error. So because those journals have the potential to either introduce errors into the system, if their experienced staff are allowed to post them, often creating journals that don't balance or incorrect, or manipulate the accounts that perpetrate fraud. So for example, I could post through the journal, I could say I'm going to write off a particular company's debt as an irrecoverable debt, but tell them to pay into my bank account. Now, that's how I could do fraud using the journal. So it's controlled, really. So in a manual system, the more senior accountant, typically the financial controller or finance director, would control this type of journal, and they'd keep a hold of a special book of prime entry. In the digital system, the system's password protected, so only certain users can have the authority to post journals of this type. So auditors would review those journals in depth, given their risk, really. And so that's what the journal is there. We'll go through that later on in another chapter in terms of what journal entries are posted into the journal. But it's irrecoverable debts. We've got correction of errors, and what else have we got there? The opening balances for the company. We'll see those ones later on, really. Which journals would be posted into the journal. But we'll come back to it. On the suspense accounts and errors bits, we're going to spiral around in the curriculum, really, and come back and return to them again and again in different chapters, just simply because there's 30 to 40% of the exam, and you'll need to sort of see it in different ways for it to really properly sink in. So, reach to the next chapter. In chapters 4 and 5, we learned that errors can occur, and we've actually fixed the errors using the suspense account. In chapter 3, we reconciled the cash book to the bank statement and had that as one method of finding errors. Now, in the next chapter, what we're going to do is we're going to reconcile the trade receivables control account to the sales ledger, the trade payables control account to the purchase ledger, and we're going to find other errors. And typically what we're going to do is we're going to answer the last question that we've got, which is there's a difference between the trade receivables control account and the sales ledger, or the trade payables control account and the purchase ledger. Which of the 4 scenarios could possibly be responsible for this error? Or which of the 2 of the possible 4 scenarios could be responsible for the error? And then in the later chapter, I'm going to return to the journal or the suspense account and spiral round and just redo it again, just specifically for those ones, and a few questions in that as well. Again, just because that's the hardest bit in the unit, and also as well because it's about so many marks. This is 30 to 40% of the marks. So hopefully that was helpful. Thanks for listening. I'll see you on the next one. Bye bye.